The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 1st, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's have an extraordinary one. And the easiest way to have an extraordinary day, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. What are the buyers and the sellers? What are the bulls and the bears doing? We're going to go find out. I want you to know that I'm absolutely grateful for your presence here. But most importantly, during this next hour, I am here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6640. If you can't call them, we've got you covered. You can always let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question and in the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 77 points, 25,993 is the print. The S&P's up 12 at 2796. NASDAQ 100 up 0.5%. That's 36 points, 71.34 there. So it's not green across the board. The transports are off 14 points. Spot volatility index down 70 cents. Goldilocks off 17 buckaroonies. That's 1 3/10%. And 2.5%, or nearly 2.5% to the downside, is hi-ho silver. And that's really where we're going to start, not with silver, but in the metals complex, because the first question came in earlier this morning. This was a message from James. So James writes in and says the following. Do you feel that the GDX, let's turn over to the GDX right now, to the 3 time frames. So here we go. So on the 3 time frames, and I'll read the question, but at least now those of you that are watching us on TigerTV, you've got the feed. You can see the daily, weekly, and monthly charts, and that way, you know, you too can play this game at home and say, hey, what's Stevie going to say next? But in any event, the question is, do you feel that the GDX and the miners, the junior miners, need further testing and consolidation, or do you feel that for a moderate to aggressive trader, for several weeks, that either of these is a buy basically right now? So let's go answer that question. So here's what we know, James. It's you and I and everybody else that's out there answer the question. So one of the things that you and I can look at for support, right? A pullback, we're always trying to understand, is price just pulling back to support, or is it doing something else? So when we take a look at the gold mining ETF, today at 1:09 in the afternoon, on a daily time frame, price is trading below support. It's a bullish structured box, meaning the bottom of that profile at 2203, closer to the center of the box versus the center being closer to the top of the box. So 2203, James, should have held. Thus far, it has not held. If we close underneath it, then all we have to do is really look to the weekly or the monthly chart to say, hey, where's the next level of support? On a weekly time frame, that would be 2154. So is now the time to buy it? No. Well, that's the first answer. If we just take a look at profiles, the answer to that would be no. I can appreciate you considering that, because even that was a question that I was asking myself. Now, on the weekly time frame chart here, I'm going to go ahead and pull over the weekly time frame on my other charting tools, and you know that when we see that green solid line on a weekly basis inside the GDX, it was from the week of July 13, 2018. Last week, we saw price just close above it slightly, and this week we're back down below it. So here what we know is that resistance, it really wasn't a breakout. It was a false breakout. And now price is pulling back to Stevie's weekly green line at 21.33. So 21.33 is a potential spot. 21.54 is another potential spot, and just looking at the weekly time frame. But what you and I have to do, it's incumbent upon you and I, James, to know the following. When we take a look at the GDX, we must know, and this chart shows it vividly, the directional correlation between it and gold. So on the top portion of my chart right now, we've got the gold contract. The center portion is the GDX. The bottom portion takes a look at the directional correlation between the two instruments averaged over a period of 5 days. When the bars are above zero, as most of these are, it tells you that there is an absolute direct correlation. So that means not only do we need to get the GDX right, James, we've got to get gold right. So how are we going to get gold right? Well, the one time frame chart, we'll look at the others, but the one time frame chart that you and I have looked at over the past several days, probably more than a few days, was simply the mere fact that on a 5-hour time frame basis, gold gave us the right topping signal. Tom DeMark set up 9 count. Then we can see how price broke through the first level of support back here around February 20th or so. Let me get a crosshair out here. The actual close was on, was at 4 o'clock in the morning on the 21st out here. And then we saw Stevie's green line, red line, hold as resistance. Every bounce, every test by the close of the session had found resistance there. That number is 1314 as we speak. What we also have during this 5-hour session does not end for another 48 minutes at 2 p.m. is a close below the 9 a.m. bar from February 14th. And that's where we've got that red solid line. So now we're seeing all types of levels of support being broken. Is it the 5-hour time frame chart that would give us a signal that the move lower is over? It very well may. It's been the one so far that's been giving the overall best signals. So, but let's go look at the daily. We should really investigate further. And if we go take a look at the daily, what we're going to see out here is we're going to see that gold is selling lower in all currencies. So every gold trader around the globe right now is not just seeing gold drip in dollars, right? We say, okay, the U.S. dollar index is higher, makes sense, gold is moving lower. Gold is moving lower in every major currency out here. So there's no buyers yet. When we look at gold expressed in dollars, we look at the left-hand panel chart. We can see that right now we are down below 1309, which was a really critical level of support because gold on a daily basis was in a bullish structured profile. This says that gold should head down to the 1288 level. But wait, there's more. So 1288, James, that's the next place for us to look at unless we see some type of reversal signal on a 5-hour time frame chart. 1288 is the nut. 1292 to 1288, this is now the weekly horizontal trading range boundary lines. We've seen 32 closes or opens at around that 1292 level. And below that, you go all the way back to 1225. I'm not talking about Christmas Day. I'm talking about the price, 1225. The answer to your question, keep your powder dry right now. We're not seeing anything at any kind of a support level, gold or the GDX. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okie dokie. So now let's go check on the markets out here. No questions in play at this time. Nothing on deck. So go ahead, either send me an email, Steve at TFNN.com. Of course, I would love to hear your voice, 877-927-6648. So what are the markets doing out here today? And that's a great question. Let's start off by taking a look what they are and they are not doing as we speak right now. They are not doing what's taken place so far inside the ES Mini has been a test of resistance, 27.98. We're trading at 27.96.75. Yes, price has gotten higher than that. It's been up at 28.08. It's really going to depend on the close. Does it close underneath resistance? Remember, price is sitting inside the ES Mini, bearish structured profile, because the center line at 27.68 closer to the top. So there was an individual who called yesterday, said, you know, should they consider taking a short? You know, on whenever we were talking about that on the air. And I said, yes, I can see that play because of some topping signals and patterns that we have inside the indices. And what we talked about was making sure that the stop was above the high from February 25th. February 25th is a shooting star that sets up the resistance or potential resistance, what should be resistance. That high is 28.14. That trader, if they followed that advice, is still inside this trade. If we see price to close over that today, I would be out of that trade for the over the weekend. Because not only will you have the top of a profile that's bearish and structure fail, you'd also have resistance from that candle on the 25th fail, and it says price could go higher. At 1:20 in the afternoon, the NQ is basically sitting on the top of its new box out here. I think we discussed that yesterday. If not, we're going to discuss it today. This has a new profile that formed yesterday. 71.35 and change is the top of that box. We're trading at 71.37. as we speak right now. So it too is now this is not a bullish or bearish structured box. If anything, I'd say it's bullish because it's a box that has a higher high than the prior high and a higher low than the prior low. So there's nothing bearish really about this. Just prices trading up at resistance. The Russell 2000 today, that's the bottom right hand panel. What that did was that tested so far today resistance 1593.32. You're at 1590.40. And if we look at the Dow, it's the only one that is really trading above resistance. Its number is 25,971. 25,971 or 25,987. Really what you need to see so here's what a bull wants to see. A bull wants to see just simply, hey, we'll take a close above the tops of those profiles. That's what a bull will be saying. A bear would be saying, well, hey, we'll take a close below the tops of those profiles out there and across the board. So those are the numbers that I would be watching, that I am watching inside of the equity futures contracts out there. If we go take a look at, and let's do this, if we go take a look at the cash indices, just to try to get a feel for has today's move done anything to say that the topping patterns don't still exist? Well, if we look at the S&P 500 specifically, and Basil may have covered this, and if he did, I apologize for covering it as well, but we know that we've got wave number 7, letter G on my charts out here. That also happened to coincide with a setup 9 count. That's the high. So it's a beautiful thing in the S&P 500, potential topping signal. Price, as you can see, is trading really, you probably can't see it, but we're trading at 27.96. It is just below Stevie's green line out here. Topping patterns still in play. Nothing has changed there. Not yet, not as of 1:22 in the afternoon. If we look at the Dow out here, we're going to see is a similar. Well, we're going to see it if I can actually grab it, pull it over here. We're going to see something similar. What's the something similar? Wave number 7. The 9 count, the shooting star, and inside the Dow. So here's where we have a little bit of divergence with regard to interpretation from a technical standpoint of what the market is communicating to you on that 1:22 in the afternoon. That's a big sentence. I'm going to pat myself on the back for actually saying that because it sounded lucid, which it should. But what we can see out here is you can see that price is trading below Stevie's green line. So when you trade below, close below, not trade below, but close below it, it tells us that there is a signal to us that there's a further retracement. So when I say top, I'm not saying like top of some consequence. We don't know that. The only time a top signal is a top of consequence is when support starts being broken. And there's no support that's been broken. You and I, this whole conversation we're having is about resistance. It's not about support. Gold, different story, right? We saw gold, we saw a 9 count on a 5-hour time frame. We saw support get broken. Once support got broken, bad news, right? Bad news bears out here. Good news for the bears and gold, bad news for the bulls. So the number on the Dow is 26,049. What do? You get a close below this, but on the futures contract, it's above resistance. You got a coin toss. You just have a coin toss. There's no other way to well, you can call it any way you want. Stevie would say you got a coin toss. Now, in the New York Stock Exchange, if we take a look at it, New York Stock Exchange has begun moving higher, doing it with less relative energy out here. It also has wave number 7. It also has a setup 9 count out here. And prices trading below Stevie's green line. 12,705 is the number there. So again, the topping signals remain in place. What took place today, even if we were at the high of the session today, nothing will have changed with regard to those signals. We start taking out those highs, closing above those highs from the 25th, then we've got a different story. So far, nothing has changed, with one perhaps exception. And that exception is the NASDAQ composite. If you're wondering, I don't know that you're wondering, if you're wondering, there was a question, and I think came from John inside our Tiger's Den. What is it that is going to precipitate a move lower in the markets, right? I think that was the question, or close to it. What will precipitate that, or where I believe it will come from, is the NASDAQ. And maybe it's the NASDAQ composite. Because what we can see here, We see the setup 9 count, topping signal. Yesterday, it closed below Stevie's green line. As we speak right now, we're trading above Stevie's green line. So different than the Dow Cash Indice, different than the S&P, different, although we haven't looked at the Russell, different than the Russell, different than the New York Stock Exchange, different than the Wilshire 5000, basically different than everything, different than the SOX. So, but so the last piece to fall in this equation, should there be any kind of top, any type of top of significance, looks to me like it comes from the NASDAQ composite. But you and I, we can whittle it down even further. We don't have to look at 3,000 stocks. You and I can just look at how many stocks make up the XLK. Does anybody know? Off the top of my head, I don't know. 50, 60, something like that. So fewer stocks. Now, in the case of the XLK, where we had been anticipating that the prior two high, or the prior high and the prior low were marked with wave number 7, that pattern has failed because we went to a higher high. We can also see, but the 9 count, it's still out there. And prices traded right into the resistance of the top of its profile out there. So we just have to watch for the XLK. In my opinion, that's what we've got to watch for to be able to help identify when that top of consequence could take place. Steve Rhodes with TFNN. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Let's go out to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you?
Thank you, Steve. I was wondering, I was taking a look at SPHQ, which is a rising trend, looks like, and I maybe wanted to put a bull spread on it.
What's the ticker symbol again?
I don't know the difference
apologize.
between
What's the ticker symbol, Ron?
SPHQ.
SPHQ. Oh, SPHQ. Okay.
Yeah, that's
all right.
Some kind of a 500 ETF.
Yeah, it says the S&P 500 quality, which is pretty good. You'd hate to invest in something other than quality, but this is the quality ETF. So what you'd like is my advice as far as what do I see and where is the SPHQ headed to, correct?
Correct.
Okay.
And then later I had another question. On your charts, you showed the letter G a lot. What did that G mean?
So part of the Chapman wave, so the Chapman wave is doing these wave counts. Let's put SPHQ on our screen, and then I can answer it visually. And then so now this is not the Chapman wave. This is just a piece of the Chapman wave tool, which is doing these wave counts where you are looking for, well, let's see how I can easily describe this. You start from, in this case here, for SPHQ, we're going to start from the lowest low that we have. That happens to be the session from December 25th. And from there, I'm going to start doing counts to the upside. Now, the way that the counts are done, you'll see that the letter A on my screen took place on December 29th. The letter A on the screen on December 29th could not have been confirmed until January 1st because it was a lower high. Then you wait for a higher high over that session where the A was formed, and then it gets lettered with the second letter once there is a lower high on the following session. So it's January 11th, that becomes count number 2. What you can see on my chart is that SPHQ made a letter G, that is wave number 7. Where that came from is Basil has a tool called the Rogue Wave. This is not the Rogue Wave. This is just a tool from 2 of our dinners that noticed that when markets got to wave number 7, any market, any instrument, any time frame, that's where you could see the most significant change in trend take place. Didn't guarantee it. There's no guarantee out there. And so when you see letter G on my screen, it's because I've got other numbers now that we've used that Tommy DeMark setup 9 count, and sometimes we'll go ahead and take a look at some of his other tools out there. And so that's really all that represents. And in this case here, for SPHQ, it made a higher high today. So you'll see the letter H on my screen. H isn't really a part of the Chapman wave. It just is a quick way for me to know that that 7th wave has been violated and you need to start over. The question becomes, where do you start over? For me, I always like to go back to the 4th wave or letter D and start my counts there. This is kind of a there's not really a hard fast rule on that. Does that answer your question with regard to the G's?
Yes.
Okay.
Yes, very much so. I appreciate that.
Sure, no problem. So SPHQ is in the 4th wave right now, letter D, and if you use Chapman wave tools, which are going to be the MACD and the stochastic, you would go ahead and you would include those in here for your analysis along with different moving averages that he uses, because when you get to that 4th letter, or D out here, as he says, something else can happen. So you would be kind of cautious around there. And Basil's just typing in right now. So Basil, hopefully I did your service well. But what you see on my screen is not the Chapman wave. What you should do is sign up for Basil's courses and buy his CD, for goodness sakes, and just simply, add that as one of your tools in your arsenal out here. Now back to the SPHQ. This thing, what it did today is tested support, 3136. So there's still a lot of quality left in the quality S&P 500 stocks. Whatever they make up, that's what the daily time frame is saying to you. When we come back here to take a look at TAS market profiles, a way for us to look at support or resistance, everything is above resistance out here. With the exception of the monthly time frame, which has a new monthly profile that formed here in the month of March. And this says that this could head up to 32.32 as its next resistance point out here. So that's what I see when I take a look at ticker symbol SPHQ. If you're looking for this to head lower, we just don't have a signal here that I see just yet. And if anything, this week specifically, well, last week and now this week, we had a close above this solid green line out here. That solid green line was established by doing this Tom DeMark setup 9 count. It identified a level of resistance. It was from the week of November 16th. And a close above that type of resistance says there's a change in trend. Now, it's a weekly chart. And so you didn't need me to tell you there's been a slight change in trend based on the move off of the December 26th level. But from a technical standpoint, taking that level out on resistance says, hey, this thing, there's no reason for SPHQ right now to not want to head higher. It's above all kinds of resistance out there.
Okay. Thank you very, very much. I was just thinking that if, people might want to, if it's a little more cautious, I mean, you might want to buy the good quality S&Ps rather than the real volatile ones, and that's why I was kind of looking at this.
Yes, but the only thing, and look, Ron, I have no idea what's in there.
I don't either. Okay.
Yeah, so, if you and I, we said, hey, you know what, let's create this ETF, and we're going to market it. You, because you're a smart guy, you probably said, hey, Steve-O, we should call this the quality ETF out there. So
yeah,
whether it is or it's
not. Figure out which options are more reasonable and things like that.
Yeah. No, I understand. So the SPHQ at this stage here, there's no signals that it's formed a top. It's gotten to that fourth wave, okay, in Basil's work, but you really have to go apply the MACD tool, some moving averages that he uses, along with the stochastic out there to see what kind of signal, if any, is out there. Okay?
Appreciate your information. Thank you, sir, very much.
Bye, Bet. Good to talk to you. Have a nice weekend. That was Ron in Denver. We do have a question that came in via email from John in Sarasota, and he wanted to take a look at the TBT. So the TBT is the ETF to be short treasuries out here. Nice move. If we take a look at it on a daily time frame, it's above resistance, sort of. If we were going to just use the TBT, and you know me, we won't just use the TBT because we want to go look at the underlying instrument. But, well, actually, it's pretty positive, John, because resistance would have been, and I didn't mark it right, I would like to mark it right out here. It would be the low from the trading day of December 18th. That was 35.21. You're above that. That's pretty good. TBT, if I were just going to ignore treasuries, maybe I should ignore treasuries and just say the TBT says price should want to go to 38.16. That's the top of its weekly profile, bullish structured weekly profile. But let's do this, John, because I don't think analyzing the TBT does you or I any good. We need to analyze the 30-year Treasury. So we get back from this break. That's what you and I are going to do. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 79, S&P is up about 13. And we're going to go take a look at the 30-year Treasury. The real question that John in Sarasota was asking me with regard to the TBT is, hey, Steve-O, what's the 30-year Treasury doing as it relates to support? And as we take a look at the June contract right now, what we can see is it's trading right into, in essence, what should be 2 levels of support. Either the bottom of its daily profile, that's at 143 and 28/30 seconds, or at the last time that we saw a bullish reversal candle, which was a bullish engulfing candle on January 22nd, that means the low of the prior session, because that was the lowest low of the 2 candles out there, is support. January 18th, that is 143 and 23/30 seconds. That is the key level that you need to see broken. Does it need to be broken today? No. It just needs to be broken. If, in fact, it gets tested, which it has not, gets rejected and price holds, and you're in the TBT and you've got a profit in it, I would take that profit. I would get back in it if we see price on Monday close below, or Sunday night. Well, I can't really do it Sunday night, but start to move below 143.23 out there. Or you could say, well, I'm going to make my decision today, even if support holds. I'm going to consider what our Treasury is doing in the other currencies out here. Do we have some type of uniform message? And the answer is we do not. What you can see in screen number 2 is Treasury bonds in euros pulling back. Okay, they're sellers. In dollars, they're sellers. What about in terms of yen? No, they're not sellers. It's actually moving higher today. So they're not celebrating in bonds moving lower, not in their currency. And in pound sterling, for the second day in a row, you have basically a sideways move. If anything, it's up to a few ticks from the close of yesterday, but they're certainly not selling out here. So my advice would be go back to and say, okay, the advice that I gave is the advice that I would give now, having taken a look at what the 30-year Treasury bond is doing in the other currencies out here. On the other hand, close below 143, 23/30 seconds today, a key level of support will have failed. It could be a fake out, But you got to go with what you got out here. It's not really it's not a false move until you see price get back above it. So I hope that helps you with regard to TBT. If you're asking me, which I don't think that you were, but if you were asking me, should I enter TBT right now? The answer would be absolutely not. Not when you're up against support. You've got to wait to see who wins the so-called battle. John Z writes in, and it's a different John and Z. How about that? John, you've got a brother out here. You guys should get together. This John's from Milwaukee. Wait a minute here. That's too much of a coincidence. Is this your alias out here? It's not, I'm sure. It says, I'm long Procter and Gamble. It's just a coincidence, right? Coincidence. Yeah, I don't think so. PG. So it says, I'm long Procter & Gamble for many years. Okay. Well, many years means we've got to put PG on the monthly and the weekly time frame charts. Forget about this daily nonsense. But let's read the question already, Steve-O. If you could bring your charts back to December 2014. All right. Let's go. Where's December 2014? Let's do December. I think you're going right back here. No, that's May 2010. Okay. December 2014. Where's December 2014? I'm sorry. I'm just trying to. December 2014. Okay. So I'm just going to put an arrow up here. That way everybody that's watching in, well, hopefully it's an arrow. Is it an arrow? We're going to make sure it's an arrow. Let's use the red arrow. There we go. Here is the month of December 2014. All right. Let's keep reading it. We're doing it on a monthly basis. You see the price fall from 93 to 67, September 2015, and again from December 2017, you see the price fall from 92 to 72. What price should I put a sell stop to avoid a similar $20 to $25 pullback? Okay, got it. So I think I got it. First, the month of December 2014, that had created this Three River Evening Star pattern out here. It's a bearish reversal on a monthly basis. And what that does, what that did for you, John Z, is it went ahead and set up a level of resistance, 93.89. Now, if we take a look at September of 2017, which you mentioned, as price was getting up there, it rejected that. What did that tell us? Of course, it's easy to say that now because we get to look at the right-hand side of the chart. But what you and I know is that that was resistance. We knew it was resistance. We knew it was resistance in September because you got another bearish reversal signal. That other bearish reversal signal here also set up another level of resistance. Now I'm going to have to go back to number one and change it so the price is at the bottom, just so that it's easy for you to be able to see. So let's do this right now. So now you're going to see the resistance zone just by candlesticks alone on the monthly chart out here. You're a long-term holder between 93.89 and 94.67. Old resistance should be new support. Strong resistance out here because it couldn't break through it in the month of December 2018. But hey, come January, you're up and above it. So if you're asking me where should you put a sell stop on a long term like this, it would have to be below 93.89. Because that should be support out here. That's what I see right now when I look at that chart. If we come over here to Procter & Gamble, what is the chance that John in Milwaukee, that this month, the month of February, was a high? There's a chance. So it's a great question out there. With regard to the pullback, I don't know where the pullback might take us to, but here's what you're going to notice. First, let's do this. From a monthly basis, as Procter & Gamble was making it low back here in May of 2018, it was at the time to mark setup count of 8. We know that on bars 8, 9, or 10, you can see a top or a bottom, a change in trend. Certainly worked there. Well, if you take a look at where we're at right now in the month of February, we just finished February. We're now here in March. February is bar number 8. Maybe it's bar number 9. Maybe it's bar number 10. I don't know. Could be a coincidence. You kind of get the picture out there. I just think you got to go with what took you to the dance out here. And right now, when you take a look at the monthly chart for Procter & Gamble, we see how these bearish reversal signals have helped you to identify resistance. Old resistance should become new support. And that's the way I would look at it as we speak right now. So thanks for writing in. I hope that helps you out. And you've got a brother from another mother that's in the Tiger's Den all the time. All right, no other questions. we have out here. We've got a minute to share before we go to break. So what do we go take a look at out here? Short-term time frames or something. What do we want to look at? I don't know what we want to look at. Let's look at a short-term time frame real quickly here. What's going on in the ES Mini on a 30-minute basis out here? Not much. Not much. Resistance here in the ES Mini, 30-minute time frame, 2798 to 2790 to 2800. 2800. So you've got about we're 2797, about another 3 points if it price closes over the 2800 level. You've got a further rally to ensue. So the Dow's up 77, S&P is up 13. Steve Rhodes with TFNN. Be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Real quickly here for Tim, who wrote in, he wants to take a look at the XLF. He's asking for an entry price. No, you're not going to take you're not going to enter the XLF right now. It needs to close above the candle session from December the 4th out there. The high of that session is 27.01. That's resistance. You're at 26.64. You're too close to that at this stage of the game. Let's go to John in New York. John, thanks for calling. Thanks for holding. How are you?
Okay. How are you, Steve?
Very good, thank you. And you want to take a look at KL, is that the correct? Tell me what you're doing, how I can help you. We've got about a minute.
I'd like to go long on it.
Okay.
What price do you suggest?
So at this stage here, what this is, and this is a Kirkland Lake Gold, this is telling you that it wants to pull back. Today is a signal that it's formed a top out here. There's a couple of signals. Yesterday, on a daily chart, it made a number 9 count. That can be where you see a change in trend. Price was moving higher, doing less relative energy. The confirmation that it forms a top then is a bearish reversal signal. Right now, as a 155, you've got a bear sash candle. Your question is, where's the entry point? It's right around the 32.99 right now. 32.95, 32.55, that would be the range. That is support. I don't know if support's going to hold. We have to see what's going on with gold, the miners, volume maybe as KL pulls back to that. But I think at this stage here, you just need to be patient based upon the topping signals that I see there. Does that help you out?
Yes, thank you.
Okay, you bet. Thanks for calling. That was John in New York. So we've gotten to everybody's questions out here. Just the general overview of the ES going into the weekend. Jimmy D in the den. It's not really any more complicated than this. Watch those futures contracts closing prices. 27.98 is a key level of resistance in the ES. 71.35.80 in the NQ. 25.971 in the YM, and 15.93.32 in the Russell. You close above all of those, a level of resistance will have failed. Folks, thanks so much for being here. Stay tuned. David White, Tom O'Brien to take you on home, and I'll be back with you on Magnificent Magical Monday. Have a great weekend, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.